Welcome back to Tuesday Target, the audio edition. This week's letter is called Forbidden Fruit. Apple goes red, and the title almost undersells it. While the whole market spent the week screaming bubble at Nvidia's $500 billion financing carousel, Yuri says the real story slipped past almost unnoticed.
Apple, testing memory chips from CXMT, a Chinese manufacturer sitting on the Pentagon's blacklist over alleged army ties. And Cupertino wants the White House to bless the whole thing. HP and Acer skipped the courtesy call, by the way. Their laptops already ship with Chinese memory outside the U.S.
So, why would the world's most image-obsessed company risk a Washington firestorm? Because AI demand has swallowed global memory production whole. The big memory makers are sold out through 2027, DRAM prices went vertical, and Apple calls the pricing unsustainable while quietly raising iPhone prices to cover it.
Which brings us to the line of the week. Yuri writes, nobody begs their geopolitical rival for parts of a fake boom. Scarcity this brutal is the market's bluntest proof that AI has crossed from story to business.
And the receipts back him up. MercadoLibre runs 90% of its customer service without a human, while the business tripled. Airbnb ships products up to 60% faster. Google and Amazon each sit on cloud backlogs near $500 billion. Akamai's GPUs sold out to the last card.
As the letter puts it, price signals eat policy doctrine for breakfast. The tech Cold War just met its deadliest opponent, a purchasing department. Okay, from chips to crude. The Strategic Petroleum Reserve just fell to its lowest level since 1983. Already inside what the industry calls the operational floor.
And Tehran can read that gauge too. Unconfirmed reports say Iran has concluded it can simply wait out this administration until January 2029. Yuri's take, patience, it turns out, is also a weapon.
Meanwhile, the bond market gave Treasury Secretary Bessent a reality check. He spent the week trying to talk long yields down, and yields climbed right alongside oil anyway, with the 30-year back near 5.25%. Now $125 billion of fresh auctions land this week. Jawboning meets supply. Historically, supply wins.
Gold clearly skipped the memo too. Fresh cycle highs above 4,350 despite a firmer dollar and rising yields. The exact conditions that usually sink it. Central banks are buying, Chinese speculators are back, and trend followers are still short. That's fuel. Though the letter flags heavy resistance between 4,400 and 4,500.
Now the tug of war. Bank of America's Bull and Bear indicator hit 9.7, its highest reading since the 2021 meme mania, firmly in sell territory. Against that stands a record buyback wave, $1.4 trillion of repurchases expected to swallow all the new share supply. Corporate demand still outweighs corporate supply. For now.
So what do you actually do with this tape? Yuri keeps it simple. Stay invested, stay hedged, stay unimpressed. Convexity is trading cheap, so own it while the market hands it out. And circle August 26th, when Nvidia earnings collide with Jackson Hole Week.
Which is why this week's trade lives in the boring middle. Devon Energy, where options still price a headline that never arrives. The letter sells both stories at once, war and peace. As Yuri puts it, war or peace ends the trade, purgatory pays it. The full setup is waiting in the subscriber chat.
And that's your 4 minutes. The full letter, Forbidden Fruit. Apple goes red is live now. Educational content only, and none of this is financial advice.
Yuri would add one more thing. If you are only here for the money, look elsewhere. Success requires dedication to the craft. See you next Tuesday.